Good morning, good afternoon, good evening. It is Sunday, July 31. We are about to embark into August, the final month of summer for you guys. And earnings season has officially ended. Yes, there's still earnings that are going on. Yes, there are still companies that are relevant that will be reporting, but for the 95 percentile, earnings season is over. Complete, done, finished. So I'm going to go over this really quickly for a number of reasons because there's no reason to keep kicking the same dead horse. Um, we ended last week at 4130, first 4100 close since June the 8th. We're just below the June high, which I'll show you on the charts. We are closed, okay? We closed within 15% of the all time high. First time we've done that in quite some time. But obviously, since we made that break there on July 18th, which I'll go over, it's been a significant run. Last week was a 194 point week. This week was a 229 point week. We ended the month of July 420 points, slightly less than what our average has been during this drop down. But at the same time, when you come over and you look at where we came from off of that June low, it's been a 500-point run, 503 points. So it does fit within the parameters if you just give it a little tiny little bit of a stretch, having been that low in June came on June 17th. Granted, we are looking for a little bit of a stretch. We've now been in this 16-week run, or sorry, 6-week run, uh, going through this from that time period. What? Boom, 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 boom. Yep, yeah, 6 weeks. So 13.84% is where we've run. This recent run from last week, 2 weeks ago on Thursday, was an 11.25% run. And while we have been bullish, during this entire process of this 6 week so period, this went well over and above any kind of expectations once we broke into those 4,000s. And I'll show you here on the charts where we're at. These are the rallies that we've had. These are the drops that we've had. I'm going to show you on the charts. You'll be able to see it really simple so that you understand that this is a two-way street. We are able to play this both ways. But then I'm going to come back and I want to go over the wider picture and give you an understanding as to why everybody and their mother is expecting a pullback. So now where this pulls back to is what's relevant. Not that it's going to pull back, but where it pulls back to is what's relevant and what we need to actually be paying very close attention to over the next week, over the next 2 weeks. So here we go on to the charts. Really quick and simple. I'm only going to go over 4 charts right now. This is the SPX as I had been counting from the beginnings. 1, 2, this is R3 as we had eclipsed over the 123 right to the 138, basically more or less, just into that zone right there above that 41.15, which is the low that we had back in February, back when Russia invaded into Ukraine. So where we drop, okay, where we're dropping here, 13.84% off of the June lows, 11.25% off of this low 2 weeks ago. Here's the FOMC meeting, which was, again, the very first FOMC meeting of this year where we did not produce the low of the day after the announcement. This Friday was the first green Friday of the month, of the end of the month, since January. And if I count right, I believe it's the 7th time in 2 years that we've had a green Friday at the end of the month. Again, when I go onto the charts, I'm going to show you why it makes sense, but at the same time, it is some really scary shit right now where we're at, both ways. Where we drop, okay, I'm just going to try and zoom in here real quick for you. Where we drop, understanding that it is expected that we have already topped. Yes, we can go another 20 or 30 points higher. As for the drawings, where we're at, we're looking at a drop below 40.49, below 40.50 basically. Somewhere as of right now between 40.41 and 40.21 would be a healthy bullish drop. What we should see is a drop into this gap to fill this gap down here to 39.20. However, losing 39.46, that is a big bull no no. No, 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 no. We drop below that 39.45 and we close below that 39.45. The bulls are in serious trouble. We drop below that 39.07, it gets even worse. So this is a very, very important couple of days that we've got coming out to us here. And again, here on the SPX, I'm looking strictly at the RSI on the 4-hour chart. That's it. Nothing else other than that for right now. The 41.37 where we came to, that's exactly the 50% retracement from the drop that we had back in March, where back in March we climbed 11.xyz% up to that rally that we had in March before we had those 7 consecutive weeks to the downside. Again, this little channel that I had drawn, we broke up above that channel. 1, 2, 3, 4, just incredible. The day after that FOMC, or from the FOMC meeting prior to it, we had that gap above, and it's just been nothing but green candles since. Bring you up here, the 4-hour chart, as you can see here, bang, almost up to 90. We're right up there at 88, 88, 89 right now. The highest we've been since we posted that hard back there in March. So again, caution to your upside. If you are going to be playing the upside, and your downside has to be measured out in a ratio of 1-2 or 1-3, where you're less exposed to the shorter term and exposing yourself a little bit more 1 week out, end of the week this week, even going out even 2 weeks out, unless you're one of those guys that knows how to trade the long term and go out and buy September or December contracts so that you can protect your capital, because protecting your capital is always more important than the amount of money that you're going to make. Come here onto the NDX. The NDX, again, 4-hour chart, only thing we're looking at. Zoom in here. Again, a completed 1, 2, 3, 4, 5 is how I had it. Filled in that gap going back, right back to the 2021 Open, right up here at the June highs, the June 2 highs, where we had that gap to fill. Right there, boom, 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 everything. And here's your channel line, which I'll zoom out on this just to give you an idea of that channel. Here in yellow, you got your 200-day, you got your 400-day moving average. And here you can see your 50-day moving average starting to curl up a little bit. But again, at the same time, I'm looking here at RSIs. RSI overbought, RSI overbought, RSI overbought, RSI overbought, RSI overbought, overbought. These are your 4 hours. And when you come down and you look at where your 4 hours are, boom, sell off. Here, overbought, boom, sell off, boom, sell off, boom, sell off, boom. Here we are, overbought. So we'll see where this sell off brings us. As long as we can hold down there around that 12,000 level, we should be okay as far as the bullish idea as to we are projecting to still go a little bit higher. If we fail that 12,000 level, the bulls are in trouble. Period. The end. That's just the way it is. And like I said, I'll zoom out a little bit just to give you an idea as to where we're at. And here's that channel that I've got drawn, resistance and supports. And we come right up to that, right up to it. So again, because we're talking about here going back into December, you've only really got 2 plots. It's not something that you could go out there and bet your house on, but at the same time, you can come over here and look at it and say, yep, everything does make sense. Yep, definitely going to be looking to see if we can get a pullback here. Yep, definitely not going to be exposing myself too much to the upside. Come over here onto the Dow Transports, which I haven't covered the Dow Transports in forever, only because I've not needed to. But oh my God, did these things start to get thrown money into. This was insane how much money got thrown into this from Wednesday to today. They climbed, what is that, 1,300 points, 10% from Wednesday. Unbelievable. But again, here we are just looking at the 4-hour charts. This one never peaked before we had the sell down there in March. Peaked over here, right here at the start, middle of April. had your little dip after you started to sell down a little bit. 7 weeks of going down, and here we were down there at 12,000. But unbelievable the amount of energy that went into this Wednesday, Thursday, Friday last week. Come over and look at this from a much wider point of view. Here's the all-time highs, and here is everything since then going down. So, not in the greatest scenario of what you would want to be in if you were trying to say, yes, I'm going to go get long. Not the place to be long. And coming in here as well, you can see your 6-hour charts, 12 hours are overbought. You had your overbought 12-hour over here back in March. You had your overbought 12-hour as you went into the highs back in November. So, again, not where you want to be exposed. So, again, here, where we're looking here at the SPX and where we're at right now, we should be seeing something in the closer range, right? Here's your FOMC day of a dip down here into this level for a bullish dip. Anything that we get below 4,021 down here into this around 3980, 3968 is the FOMC low, will be questionable. We'll need to be very diligent about what we're looking at, because you fail there and this all goes down to shit and we break below 3907, forget about it. The charts that are out there and the Elliott wave count, the bearish Elliott wave count that's pointing at the 2000s and the COVID low, all of that starts to get engaged and initiated if we do start breaking down below this 3950, 3907 anytime within the next couple of, actually anytime period. But really where we're focused right now is within this next couple of days, couple of weeks. I'll bring you back over onto the charts just to show you where we're at again with the VIX. The VIX, two big lines. Oh, you know what? I'll throw that back on because I had that and I took it off. The VIX. Yeah, and I'll bring you on here into the wide zone. Here, VIX, I'm looking at this from a much wider point of view than most. There's your lows right over there. Here's these coming again. You can break this down any way you want to as far as what this looks like, but this is undoubtedly a squeeze right down to our 2102. Major support here coming back from 11, 13 months. Big turn up to the upside is what we're looking for here on the VIX. Down here in this 21 level, which you haven't been to since April, this is what I've been saying for the last couple of days in the chat room. This is a cheap opportunity to get yourself hedged or exposed or leveraged or focused on the puts, SPY puts in general, more than the QQQ, even though the QQQ is going to move much greater than you're going to get a move on the SPY. But definitely a screaming alarm that you've got going on here to say, I should have myself some SPY puts and start spreading them out over the course of this week, next week, the week prior, the week after, in order to capture all of that drop that is expected to take place to a very strong test level there around 395, 392.50 over there on the SPY. So again, there you got on that for the VIX. I wanted to show that. Here, VIX, going with the default, just a default point of view here on the VIX. 14-day RSI, not getting completely oversold, never has been completely oversold. MACD, but again, just giving you an idea as to where we're at, what we're looking at from a wider point of view, and you can already visualize this trend line that goes right across here. So that's that. Here's the Dow Jones. Dow Jones, you can see here on your RSI, you're getting right up to around 65, the highest you've been since November, right? Since November. This is the highest we've been since November on the daily. Look over here on your MACD. MACD, I'm not a huge fan about, but obviously everything is bullish. Everything is stacked bullish. But most importantly, I want to bring you over here to the chalk and money flow. And here's your money flow. And you can see how your money flow peaks. Your money flow peaks. Your money flow peaks. We're at a massive peak over here on the money flow. SPX, same thing. RSI. Eh, you're not totally overbought like you were over here in November. You're right up here, right around the same levels that you were over here at the end of March. But again, coming back down, that chalk and money flow, peak, 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 bam, 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 bam. No, it's NDX, same thing. Bam, 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 bam. We're at euphoria on ecstasy times cocaine on the south of Spain at the beach on a Sunday. 68 over here on the Dow Transports. Oh my God. But again, here you go. Look at this money flow going in here over here on the transports. Unbelievable. More of a chalk and money flow over 20-day period than you had over here in November when you put in that high. And you can see here a quick ABC. Just visually, you can see you've got an ABC pattern over there. But now, spread it out a little bit. Draw a line straight down there. Draw a line straight down there, and you could see it. I mean, it's clear as day. You got a channel. You got a channel that you're in over here on the SOX, which is the semiconductors. Semiconductors are going to be the number one topic as we start going into this week because of Nancy Pelosi, which I'll get to at the end of this. Here is the UK looking at the FTSE, and this is just the iShares. But the FTSE has been one of the stronger markets out there. FTSE, here we are. Again, same thing, chalk and money flow. Look at that peak. Look at these peaks. Look at that peak. Unbelievable amount of money flow that's gone into this to rally off that July high, which, again, I can throw you some bearish charts that aren't going to make any sense or any importance right now because all we're dialed in on is where are we going to be over the next 5 days? Where are we going to be over the next 10 days? Here's the CAC in France. Same thing. Look at that massive money peak over there in November, and here we are, the same thing right here, lesser in July with a little bit of a turn down. Same thing. Draw your lines. You're getting your resistance level right there if you draw that line off of those tops. The DAX, Germany. Oof, bad news coming out this weekend about Gazprom. Oof, bad news. But again, look at it. You're talking money flow. Peak, 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 peak. iShares China. China is already going into the shit. They've been in some big trouble. Their lockdowns have not been working as far as for their economy or their stock markets, but they don't care because they're communist and they've got 1 billion people, and now they control almost all of the precious metals and all the commodities in the world. In fact, I go where I go every day to buy my fruits and vegetables. The vegetables are local. All the fruit comes from China. Hong Kong, same thing. Money flow peak, as you had here. Not in a good place to be down here, and especially with all the tensions that are going to be happening over the next couple of days. Japan, I've got Japan up on my charts. You got a 4-hour sell divergence over on that chart. And here again, here's your daily. Just an incredible amount of money flow that went into this, and it's already starting to show signs that it's starting to roll over as you are getting overbought on your default RSI 14. So, here is weekend Wall Street, and this isn't something to really go out there and rely on and bet the farm with. But weekend Wall Street does chart where the expectations are for where they're going to be opening when the market does open up on Sunday night. And right now they're looking at a 62-point drop over there on the Dow. And here, this is really cool. 58% of their clients are long the market. And this is the Dow. Here's the SPX. The SPX is looking at right now at around a 1-point drop. And they've got 62% of their client accounts are long on the market. This is IG. They trade over in London. This is the funniest part here. Here's the NASDAQ, where 56% of our clients are short this market. In any case, what we're going on to here, just to finish this off, China. Number one number for China is 8. Number one, it's 8. It's the lucky number. Lucky number 8. And when I was messaging there in the chat room, which if you would, go spend the time, go into the regular options chat, see the tweets that I've shared over the weekend about the tensions that are taking place with Nancy Pelosi threatening to go over to Taiwan. It's Sunday over here. It's now Sunday night, 10:30 at night. During the day over here, I saw three massive U.S. Air Force planes. I forget what they're called. My next door neighbor is a pilot for UPS, and he told me what the plane is, but I'm completely daft when it comes to planes, so I wouldn't want to chop up the name. But it was four propeller, wide wing, short bodied. Three of them flew in here because I live next to where used to be the military base when the American military was based here, and the airport there is still a military airport. They do a lot of joint efforts together because where I live over here in the Philippines, it's still a 50-50 kind of place. It's 50 China, 50 US. They're playing their cards as to who's going to pay them the most. The last president, Duterte, was very much pro China because the US denied him a visa. So the Americans had absolutely no voice, no ability over here for the last 8 years, 6 years, whatever it was. Now you've got the former dictator's son, Marcos, who's now president. And I can tell you already, he ain't going to be in love with the U.S. because they're the ones who took most of his family's money. So with China, he's got a big benefit as to, siding up with them. And once China gets the benefit of having the Philippines, not only do you not have any more U.S. naval bases here or Air Force bases able to drop, but you've now got control of the entire South China Sea from South Korea all the way down to Singapore, including Singapore, where China is a big influence and thumb on top of Singapore. So, what a lot of people are understanding and believing is that what happened over there with Putin and Ukraine, that was a test to see how the world would react. Now that we've already seen how the world reacted, now China has the ability to go and do what they've been wanting to do for a long time now, which is go over and take over Taiwan, just like they've done to Hong Kong. Now they have a reason with Nancy Pelosi. So this is going to be a very, very interesting few days with Nancy Pelosi over here in Southeast Asia. And if she makes that trip over to Taiwan, all I would say is if you've got yourself exposed long on options, you better know what you're leaving yourself out there for. If you have yourself exposed long on stocks, I wouldn't totally panic and totally freak out at the moment. But without a shadow of a doubt, as I've shown you on all of these charts here, we are at a peak level and very much expecting a drawback. Where we draw back to is where we're going to be able to see whether or not we're able to continue this up to that 42, 43, 4400 level. So, anyway, guys, I've talked enough. You don't need to hear me. Have a great weekend. I'll see you in the chat room.